Moving onwards to our next session on Is Your Finance Function Future Ready? Introducing our thought leader, Mr. Krunal Jogani, lead of CFO Services at Nexdigm. Mr. Jogani, head of CFO Services at Nexdigm in Mumbai, brings over 12 years of experience in finance, controllership, outsourced CFO services, ERP implementation, finance transformation, audits, acquisitions, greenfield setups, and IFRS conversations. A huge round of applause for Mr. Krunal Jogani.
Well, thank you. Good afternoon, everyone. So, organizations are looking at rapid change these days, primarily because of the emerging technologies that are there. Because of this, not just the finance function, but to its extension, CFOs also have to play a larger role in driving the organization towards the sustainable growth. Leveraging technologies along with analytical tools, risk management framework, amongst others, can be are the ones that you need to do to be future ready. I am Krunal Jogani and I lead the CFO Services practice in Nexdigm, where we supported a lot of clients in bringing in the entire transformation, not just the digital transformation, but the entire transformation of the finance function. Today we'll be talking about a very demanding topic, which is your finance function future ready? I hope this gives you a food for thought and some takeaways for today. Well, for our discussion today, I've broadly categorized our topics into 5 key buckets. Number 1 bucket being growing compliance framework. Now, we have seen that in recent years, there has been a shift from a compliance burdened environment to a compliance free framework. However, at the same time, authorities have come back on the non-compliances with a very strict hand and penalized a lot of organizations. In fact, just before coming on this particular stage, I was just reading an article where IRDA has penalized Go Digital on some non-compliance, and there is a huge penalty on that particular entity right now. Another example could be we are seeing how RBI has taken a hard stand against a lot of finance organizations, banks as well, where there has been certain level of non-compliances. In fact, in some of our clients, we have also seen tax authorities coming with a hard stand and prosecuting even for simple delay of TDS payments. In MSME space, we have all seen how stricter the regulations are. In fact, the delayed payments now are getting disallowed in your textbooks. With all these, there is an audit trail requirement, which again, it's not just for your ERP, but even for your secondary systems which are connected to the ERP. And bear in mind that this year, auditors are not going to give you a free hand, primarily because even the NFRA has given a hard stand, to auditors. Where they have penalized not just small and medium chartered accountant firms, but even Big 4, Big 6 for that matter. Now, the question is whether your finance function is ready for this or not. From the people's standpoint, you need to see whether your team has the skill set to say, for example, manage international regulations or trade agreements. Do they have the skill set to say manage tax search and seizure related incidents? If not, then you need to see and you need to train your people accordingly. From the process standpoint, you need to make your processes robust enough so that there are no non-compliances which are under the carpet, which are not getting identified. So, especially related to anti-money laundering or counter-terrorism related compliance laws that are there in India right now. From technology perspective, there are so many off-the-shelf tools available, which you can utilize and manage and track your compliances. But the question is, how many of you have implemented technology for compliance management? Is there anyone, maybe, I'm sure here at least 60% of you would say that compliance management tool or technology is still not implemented, or they are on the verge of implementing, or they are still starting to evaluate it. So with this, I'll move on to our second bucket, which is emerging technologies. Now, finance function has always been a backbone of stability and tradition, but it is seeing seismic shift primarily because of the emerging technologies that are coming. Right from AI to blockchain, it is not just enhancing the finance function, but fundamentally reshaping the way we function in finance. Now let's talk about AI. I think a lot of people have already spoken about it, but I'll just take 2 minutes where because of the capability of analyzing large data sets, it has the potential to revolutionize your FP&A function. Right from predictive analysis to automating low-end tasks, it can empower finance professionals to take smarter and faster decisions. Gone are the days where you would only solely rely on human intuition. Well, AI is going to be the cornerstone for your financial intelligence. And let's not forget about these fintech startups. These fintech startups, they are nimble disruptors, and they are leveraging technology to challenge the status quo, especially in banking and finance sector. There are so many amongst us right now which falls into this particular category. Now, question again is, how much of your organization has gone through this technology ride? As finance professionals, we should not look at AI and emerging technologies as threats to us, but we should look at them as they would enhance our capabilities to drive smarter decisions. I'm sure there would be certain resistance that will come from employees, primarily because of the change, but this can be managed through structured change management and even enhancing their skill sets. But of course, we have also seen that over dependence on technology or AI, and even poor AI framework can lead to data and privacy concerns. In fact, in some of our clients, we have seen that because of usage of unauthorized AI platforms, there were certain data leakages, data thefts as well. But ERPs right now also are seeing how they can integrate with these AI tools to give better data analysis and dashboards. So from this I'll move to our third bucket, which is capitalizing macrofinance. Now, I've seen that in my experience, most of the finance function guys that are there, they are more inward looking. They are they don't clearly understand the impact of the macro finance sector, finance factors on their businesses. Well, analyzing this macro finance factors is a bit complex process. You need to see how any event at a global level, say political crisis or trade barriers or even climate risk for that matter, can impact your businesses at large. We have all seen how Russia-Ukraine war has brought some beneficial impact for countries like us and not so beneficial impact for other countries, especially European countries. In fact, I do recollect there was one large energy organization which had filed for bankruptcy, and German government had to bail them out. We have other example like in terms of COVID-19, when it came in, the entire business environment changed. The way you function changed completely. In fact, there are so many examples, including maybe I'm sure you guys would have seen how election result would impact your sectors. But how many of you have evaluated what would be the impact of the American election result? Because the way it is going, in US, it is going to be very difficult for emerging economies like us, primarily in case if there are trade barriers that are implemented by the new government there. With this, we need to see, as CFOs, we need to see how finance function is able to catch up to the changes that are there in this macroeconomic factors. The question that you need to ask yourself is, does your team have the capability to evaluate these factors and to give a, or to change the direction of the business in case required? Do you have tools in place which can help you, forecast, or which can help you, manage drastic changes in these factors? As CFOs, you need to ensure that you are able to capitalize on the robust economy and, and create strategies which are in alignment with the economic trends and situations that are there. Like, for example, when the Make in India initiative was there, a lot of companies had benefited out of this, and even right now, there are companies that are benefiting out of this. You also need to see how you are allocating your capital, which is in sync with these macro factors. And not just that, but you also see how you are able to get the government related benefits that are there, government schemes that are there, investment promotion schemes are there, trade promotion schemes are there, how you are able to get the benefit out of this. And this can only happen if your organization is agile enough to change, as soon as there is a change in the factors that are there. So with this, I'll move to the fourth bucket, which is organizational agility. Now, with these days, businesses have started becoming more and more complex, more and more uncertain, more and more volatile. With this, you need to have the agility within your finance function as well as in your organization. And agility is not just a buzzword now. It has to, it's a prerequisite for survival and success. Gone are the days when, finance function could be rigid or bureaucratic or, mired in layers of approval, or be rigid enough. So we need to see how we are able to make the decisions swiftly and be it in respect of, let's say, taking benefits of the shifting market dynamic, or maybe navigating through a change in regulation that would come in, or maybe even capitalizing on emerging opportunities that are there. But what is agility? So you would agility is something where you are adapting quickly to the changing market trends. You are being proactive as compared to reactive. You are able to anticipate challenges before they come to you, before it impacts your businesses. And of course, seizing opportunities as and when they knock your door. But bringing in agility is easier said than done. There is a fundamental shift that is required in the way finance function works, and even bringing a change in the mindset and the culture of the organization. It means embracing new technologies so that you are able to take faster decisions and smarter data analysis. Furthermore, I think agility is something which can be done only with strong leadership and vision. I think the leaders at an organization level need to champion agility and bring in a culture where agility can be, can be adopted by the people across the organization. I think I'll move to the last bucket, which is sustainability. Now, I think there was some of the discussion based on ESG in one of the panel discussion, but this is going to be, there has been a lot of emphasis on ESG related initiatives, especially by the foreign governments, and now even Indian government has taken steps towards it. And it's not just the governments. There are investors also who are looking at ESG parameters while making an investment in any entity. So, in fact, the Paris Agreement that was signed by 194 countries, it has changed the way changed the way your organization works. Industries have been asked to go to zero emission over a period of years and become more ESG friendly. In fact, in India, I think, if I'm not wrong, top 1,000 listed companies are required to make the ESG disclosures mandatorily in their annual reports. Now, you would ask, what is CFO's role in it, or what is finance function's role in it? Well, CFOs and finance function are gatekeepers to companies' financial health and decision making. We are at a unique opportunity of integrating and taking charge of these ESG initiatives. In fact, in all the corporate agenda that we have seen right now, ESG initiative is one of the topmost priority item for almost 80 to 90% of the large corporates that we have been seeing. And that's where CFOs can play a pivotal role. I think because of the expertise that CFOs and finance function would have, they would be able to, understand, they will be able to help people understand the financial implications of these ESG initiatives. And for example, they can closely work with sustainability teams to, develop ESG framework, which can ultimately help in transparent and, meaningful reporting. By quantifying the financial implications, we can, as CFOs, we can showcase it to the investors that ESG is not just the moral imperative, but a strategic decision or strategic, sound business strategy. We can also influence the capital allocation towards these ESG initiatives, be it investing in renewable energy, or maybe bringing in more supply chain transparency, or influencing and including inclusion related initiatives within the corporate agenda. But again, as I think mentioned by a couple of other panelists as well, I think it needs a cultural change at a level where you are empowering your employees to own these ESG initiatives and bring a change in their day-to-day work. I think that's about it from my side. In conclusion, I would just say that while you need to see how you are able to integrate all these 5 factors within the fabric of finance function, because it will not just help you to adapt to the challenges of today, but even position yourself to for success in the dynamic business environment of tomorrow. Thank you, everyone.
Thanks a lot, Mr. Jogani, for sharing your wonderful thoughts. To do the honors, I request Mr. Jaspreet Singh Arora, CFO at Cogent E-Services, to please join us on the dais.